First off, what's your take on NVIDIA? Your word of the day today, by the way, is tipping point. Is that what you're talking about, these NVIDIA earnings?
I think when it comes to the AI theme more broadly, we're just on the heels of, last week seeing a revisit to this debate around the return on investment of AI. You had, perhaps the GPT-5 launch landing unevenly, and also this widely cited and contested report by MIT around the success of all of these AI pilots. All of this is coming at a time where, you're seeing some of this macro angst, political angst in markets, and it's putting a lot of pressure on AI fundamentals to kind of save the day again for the markets. And so I think the focus today, it's not so much around the fundamentals innately, but really around whether these mega cap tech companies, these really mighty AI superstars, can continue to clear really high hurdles. Because investors in 2025, this summer, we've become tiger parents to these AI companies. It's not enough to get an A, an A-. We want straight A+ across the board. That's the risk for markets, we think, today.
Yeah, also some very lofty estimates for NVIDIA, 53 times, for the 53%, not times. Higher revenues year over year, EPS, the estimate's 48% times higher revenues, so very lofty expectations. With that in mind, your sector to watch for us today is industrials. We actually had our Dom Chu looking at industrials earlier. Why are you looking at industrials right now when we're really focused on mega cap tech with NVIDIA earnings?
I think when it comes to the AI theme, we increasingly need to look beyond just the companies spending the money and where all of that capital is flowing. We are in the midst of a significant capital spending boom. It's hard to really underscore that even more. In fact, if you compare the amount of money that are being spent this year relative to the Apollo space program, for instance, we spent $250 billion in inflation-adjusted dollars over 10 years to get 12 Americans on the moon. Today, companies are spending even more than that in a single year. So how does this relate to industrials? Where is all of that capital going? It's going to the broader infrastructure build-out. Many of the companies related to that build-out, whether it be energy transmission and generation, data center cooling equipment, and the broader nuts and bolts that need to come together to power up AI more broadly, are in industrials. There's some pockets of utilities. And industrials has seen a really stellar run this year, but we think that this likely has more legs to come as investors continue to look at ways to diversify their exposure from the mega caps and also access some of the opportunities that is coming from this capital infusion that is looking like it's not slowing down anytime soon.
All right, I want to go back to your word of the day, or your phrase of the day, tipping point. So it sounds like you think this is a big inflection point. So let's just say hypothetically, if NVIDIA is better than expected, does that change the leadership in the market? We're just showing communication services as a leading sector, followed by industrials. Does tech kind of take the driver's seat once again if we see a better than expected NVIDIA earnings? Or are we going to continue to see that broadening that we've seen in recent weeks?
I think it's likely that it adds further evidence against the strength of the fundamentals behind tech, and really the ability for this AI theme to continue to power ahead regardless of what's happening in Washington, regardless of the apparent slowdown in the economy that we're seeing. And I think moving forward, as those risks elsewhere begin to bubble up even more, investors seek quality, they seek defensiveness. And I think if we see just continued evidence of that strength of fundamentals in tech today, we could see leadership shift that way.
All right, before we let you go, we got to ask you about Fed independence. How concerned should investors be about that, the fact that the president's trying to remove a Fed governor and he's really eyeing control of the Fed?
Moves recently have been important, but not necessarily shocking. And I'm not too surprised that equity markets haven't moved significantly on the back of recent measures to remove Cook. But we do think that really the kicker here, when it comes to equity markets at least, it's going to have to be from a real risk that is perceived by currency and bond markets. Now, we've seen that risk gradually bubble up. You're seeing that reflected in the steepening of the curve and also a lower dollar, both of which we think can continue. But when it comes to the real economy, when it comes to earnings, we're not seeing that pass through just yet. That doesn't mean that all of this isn't significant, but it's not something that we think is really taking center stage right now.